What is up, everybody? Solomon here. Super excited to be with Genfinity. Equally excited to be interviewing one of the kind of leading security protocol aspects within the Web3 space, which is Uno-Re. Today, I've got Jas Singh with me today. Jas, I always like to kind of start with allowing for a little bit of an introduction. So if you can give an introduction into yourself, who you are, your background, and what brought you into the development of Uno-Re as well.
So thank you, Solomon, for having me and Genfinity as well. Pardon my voice, just not feeling the best, but I can't refuse an interview. So as Solomon said, my name is Jas Singh. I'm a core contributor with Uno-Re, the DAO, and what brought me in Web3 was basically like when me and my co-founder Sujit we were going to college together. We were pursuing computer sciences, bachelor's of engineering in computer sciences. We realized like stuff is too easy, so why don't we set up like a development agency? So we started like doing smart contracts for firms here and there. And then this was 2017, 2018. And then basically the entire market crashed. There was no work anywhere. And we obviously like never wanted to do an ICO because it was like, it didn't morally fit well into what was, what should be done and what should not be. But we were happy to take part in the development of applications and contracts and whatnot, because that's what interested us, and other applications of blockchain, not the monetary and financial aspect of it. Then basically when the market crashed, I wanted to upskill myself because I was still studying. I started learning AI. I did like a nano degree along with my own degree. And then I did some work in health insurance claim automation. Sujit and I also built the UAE's first, which is like the Emirate, Dubai is part of the UAE. So UAE's first, like build your own health insurance plan. And that was basically sought out by one of the leading telcos, which we built the entire software, which was then acquired by a health insurer. And as part of the deal, I was supposed to stay on as the CTO. It was the third largest health insurer at that time for like 1.5 years. So that was 2020 up to 2021. As soon as my contract ended, I wanted to get back into the DeFi space. And I thought I have experience on the crypto side. I have experience on the insurance side. And I realized so many hacks happening all the time. And I also saw that no other DeFi insurer was tackling this from an insurance problem perspective. Everybody was tackling this from a crypto native issue. But insurance has been there for 400 years, right? So you need to solve it as an insurance problem, price it with actual loss ratios, right? So me and my co-founder, we set up Uno-Re, and we wanted to solve it as an insurance first problem. So we got people who were well versed in cyber insurance and actuaries from that world. We taught them crypto. We got them to underwrite policies. We got them to make frameworks, right? And those are the frameworks that Uno-Re uses today. And that's I would say I'm very proud to say that Uno-Re is very prudent in its risk management. Amongst all the DeFi protocols, we boast the most, I would say, economical loss ratios out there. We're one of the only players in the entire ecosystem which has not returned a loss to its LPs, being an DeFi insurance player, with the amount of hacks that happened. So that's a bit about why I got into crypto and my entire journey. I tried to make it as short as possible, but there are other aspects as well.
No, that's fantastic. And I mean, I always kind of next like to ask kind of for a broad overview, but we're going to kind of get through that throughout the entire portion of this interview here. So really for me, it's like anytime I'd like to, do one of these interviews, I like to ask, what unique solutions does Uno-Re or do projects bring to the table that might differentiate? And I think you touched on it a little bit, that differentiate yourself from other competitors out there. So for other security protocols, for other insurance-based security protocols out there, how do you guys really separate yourself, and what kind of market segment are you guys filling that isn't, what just exists out there with other players?
Sure. So before I delve into the competition and all of that, right, I want to make our listeners cognizant of what the market is. So the DeFi market right now is close to $45-46 billion, right? And this is the bear market. And less than 1% of that is insured, right? And there are not a lot of insurance protocols that are out there. There were about 15 in the bull market. I think 4 or 5 are left right now, which are actually like active. But the ones which are issuing policies would be like 3, 4 only. So you right off the bat, you don't have a lot of players in the insurance ecosystem, right? And then we are not only within the insurance ecosystem, but we're also within the audit ecosystem now. So being a security player, what we offer is we offer something called the Uno Watchdog, right? So what that does is it's going to protect a project on a comprehensive level, right? So it combines three very important products. So one of them is vanilla security audit. Although I call it vanilla, but it has a lot of I would say aspects to it. We have a competition that we run on our Discord server, wherein multiple auditors, which we handpicked for this particular protocol or particular partner, would then like compete to declare bugs and then try to figure out vulnerabilities. So we try to make sure that there are no bugs that are left in the contracts itself, and then we also help the protocols do the deployment of the contracts as well. Because a lot of the times, what happens with the audits is that they will review a commit hash, and then because the project wants to save money before the deployment, they will realize, oh fuck, I was supposed to make these particular changes, and they'll just do it and not send it to the auditor again, and they'll deploy a version of the contract which is not actually audited, or the commit hash is different. So we look into the deployment script as well. So that's one part. The second part is post the deployment. For 1 whole year, with part of the Uno Watchdog, we do active monitoring. So we set up customized bots for the contracts of our partners, in which we customize the variables that we're watching. So if we're going to be looking at a RVV3 fork, we're going to look into interest rate fluctuations, A token movements, etc., to make sure that if there's a hack that's happening right now, usually hacks happen in multiple blocks. So although we've lost some amount of money in a single block, let's try to save what maybe 80 to 70% of the funds that are there. So that's the active monitoring aspect of it, right? And the third one is obviously insurance. So if the audit and the active monitoring could not prevent the hack, right, it would be insured. So that's why I call it's a comprehensive security layer for the entire protocol. And it is, I do not boast that it's a SaaS solution, right? It's customized to every protocol, right? It is not highly scalable, but that's fine, because we want to make sure that we tailor security for each protocol, right? This is a journey in which multiple players can come in and participate in making sure that protocols and DeFi is safe, and we do not have a lot of these hacks that happen all the time. But it's like I'm not shy of admitting that there's no like automated tool, etc., which does everything all in one. There's a lot of AI that we use, but a lot of human aspect is there, which is why we can only accept like a limited number of applications from protocols in a given month. And then we're also constrained by our insurance capacity. Although I have some news that will be going out probably in next week, which will effectively double our insurance capacity. So that's the on-chain aspect. There's a lot of off-chain capacity that we're trying to bring as well. So I hope I didn't do a monologue.
Oh, no, that's perfect. I mean, you bring up a really good point that I don't think a lot of people necessarily think of, because when you look at kind of trust, and one of the ways that projects try to build trust is through an audit, right? And
Yes.
you said something that was really interesting to me. So like normally what you see is when a project publishes their audit report, it'll say no major, no major deficiencies, things like that, a couple of minor things to change. So you're basically saying that like essentially these projects sometimes will just go and change those minor things and then push everything live without having an audit done on the back end again, just to make sure that it's totally final. That's a pretty interesting, and I don't think a lot of people necessarily think of that all the time.
Yeah. So just to make it like clear, right? So what usually happens is an auditor, so a project would commit the code to GitHub, and a commit hash is then generated, right? And the audit report will mention this commit hash. So that is the auditor washing their hands of it. I audited this commit, right? And everything that is done after this commit is not my responsibility, which is not fair, but that's how the industry is there right now, right? The auditors are not responsible for what happens after the commit hash. So the project will realize they need an additional functionality or some admin functionality. They will uh, change the code so that will generate a new commit hash, but nobody in the community would actually go and make sure that the commit that is deployed is actually the commit hash that was audited, which is
Yeah.
what you should do.
Yeah, 100%. No, and it's so I think, and you touched on a pretty interesting statistic as well. So, given the state of the market right now, let's say $45 billion kind of floating through DeFi, you start hearing about, JP Morgan saying that they want to, tokenize trillions of dollars of traditional assets and bring them into DeFi, things like that. Before we get too heavy into that, like, milestones and achievements that you guys have had, who are your kind of target clients right now? I think I was looking through your site. I think you have over 100 active protocols that you guys are have deployed solutions with. Is the main target audience or projects that you're looking to work with right now, are they projects within crypto? Are you kind of starting to look into kind of the institutional level? Has there been any interest in that regard for you guys? DeFi protocols, things like that. So who's the kind of the target client base for Uno Re right now?
Sure. So the market is quite big. As I said, it's a bear market still. It's $45 billion worth of TVL is there on chain. Less than 2% of that is covered. In the last 2 years, we've covered around $20 million worth of capital on chain, right? And we've already paid out close to like between $500,000 to $750,000 in claims within. So our usual claim processing time is like 72 hours, which is the least in all the other insurance protocols, active and inactive, right? In the space itself. So that's what we've achieved till now, right? I don't think that's a lot, but given the capital that we had, and what constraints were there, and the interest within DeFi insurance, I think we maxed out whatever we could. But now what we've realized is there are not a lot of players in the ecosystem. Our demand for insurance and the watchdog itself outstrips the supply of capital that we have on chain around 11 to 1. So we get 11 inquiries for every one that we can fulfill. That's problem number one. That is constrained by insurance capacity, right? If you constrain by manpower, that's usually 4 to 1. So we have auditing manpower to do 1 out of every 4 projects that approaches us. That's problem number 2, because we cannot have bad quality auditors, because then we're going to lose out on the LPs that are there. If we don't audit well, then a protocol will probably be hacked, and then LPs won't trust us anymore, right? So we have those constraints as well. But now let me talk about how I'm planning on battling these constraints, right? We are partnering with the protocol is the biggest DeFi player in the entire space, to use their idle capacity to sell. So that's basically what we're doing. We're entering into a quota share reinsurance treaty with them, which would put 50% of our claims and 50% of our premium onto their books, thereby like doubling our capacity. And our agreement states that we can do 1:10 as well. So what that means is that today we have around $4 million worth of capacity. Given that's around 12 to 24 weeks past, we can do a 1:10 leverage. So that means that we can keep 10% of the risk and cede 90% to them. So thereby increasing another $36 million, bringing it to $40 million on-chain capacity. And then on the other side, I'm also working with Names. So Names is a London-based insurance participant. They have it's like a company which allows you to set up your own your own cell. So a cell is basically an insurance entity. So every insurance company, but if you think about it, like just decrease the scale to like a simple insurer, that's what a cell is. So a cell is like an insurance company giving you your own space to be able to underwrite your own capital. So that's where we're going to be onboarding TradFi money to insurance capital, right? So that's the insurance capital perspective. Now, on the demand side, we already have a lot of demand coming from DeFi. We're not looking outside. We're not looking to currently do any non-DeFi risk, because the DeFi risk, nobody understands it. There are barely 3-4 protocols who understand. We're fortunate to be one of those. And I think if we can just satisfy this space, right, and we can do like maybe 5% or 10% of the TAM that is there, I'll be happy. That's like 600-700 million dollars worth of risk. That's going to generate like 30-40 million dollars worth of premium. That's not bad.
No.
Good.
Yeah,
Yeah.
I think that's pretty good. Kind of touching base on where we're at right now, the expansion of DeFi and where we might be headed towards a kind of mass adoption as kind of this technology grows. How essential is, from your standpoint, obviously you guys deal in it every day, for that mass adoption to occur, for the expansion of this ecosystem to occur, how essential is it to have that security layer at the foundational level? As the markets, as the market cycles kind of continue and as traditional players start coming in, you can build a house of cards as high as you want to, but if you don't have that base there, that strong base there, it's all going to crumble at some point in time. So can you touch on the importance of security in Web3 as expansion begins to occur?
Okay, so let me structure my answer in a so that we have some sort of mirror on the TradFi world, right? So that we could draw some primitives from there. If you think about how insurance has aided the development of financial markets, right? If we go back into 1600s, 1700s, that's where insurance first came about. And the reason was because a lot of Europeans were basically going on these crusades and these voyages to the new world, and they needed coverage, because what if like the sailors, they just die on the sea, what happens to their family, right? So within London, the Lloyd's market was basically born, which was supposed to give insurance to these particular voyages. And that's where the entire European expansion to the world and their industrialization happened. Because at the end of the day, if you're doing any risky endeavor, you want a base level of protection, right? You might want it for your customers, you might want it for your family, you might want it for yourself, you might want it for your business, but it's imperative, because we as humans demand some sort of native layer of support, right? We as species thrive on it, right? If I want to be able to take risk, I should have foundational level of insurance or safety, something like that, right? Then we can also draw primitives from what happened in the bank run of 1930s, right? So a lot of banks were failing in the US. What basically happened was FDIC was formed, and then F the government basically wanted people to put their money back into the banks, and high interest rates were not cutting it. So they institutionalized like federal deposit insurance, right? That made people put money back into the banks. So the money was taken under from the mattresses, put back into the banks because of insurance there. So I could draw the same primitives to DeFi, um, because DeFi is even more risky, and also it's not understandable, right? If you think about it, there is so much leverage built into the system in the traditional system, not the DeFi system, but there's so much leverage built into the traditional system, but people still invest into it because they don't see the leverage, right? A lot of the times you would be buying a MBS security, you would not know like this is like worse than a shit coin, right? You would not know. You just invested and it's a house of cards. People don't see it because it's not transparent. You can't attack it. But that's where DeFi comes into the picture, right? Because everybody sees the leverage that's built into the system. It's also more attack vectors are there. So we want people to come into the system because this is what makes sense. You cannot build house of cards and then have every 10 years a recession because the shit was not transparent, right? So you want people to be onboarded to DeFi. You want them not to worry about it because that's human nature, as I've described, right? So the only solution that exists is everybody needs to have DeFi insurance at the foundational level to protect them so that they can onboard in an easy manner, right? If we want trillions of dollars of on-chain capital to come, we need to have DeFi insurance because like the retail mom and pops, they don't care about stuff. They do not want to study things, and we can see the parallels that are there within the space itself. So we want to start with a transparent layer, but we also want them to have inherent level of protection so that they can easily come into the system and they don't have to be like worried all the time. Like that's not, they're not like you and me. They don't thrive on looking into the Bitcoin chart all of the day. They're like, they have, you know, other lives to live, and we should let them have their peace of mind.
Yeah, and I think this kind of leads me to one of the things you mentioned before is that it's important to have kind of every DeFi ecosystem that you guys deal with is probably different in certain regards.
Yes.
So to make sure that, and it's almost like, you know, as mass adoption, as expansion occurs, as these institutions come in and they start leveraging these ledgers, things like that, they might want to use certain things from different ecosystems, different ledgers in a way that kind of has that patchwork of interoperability, things like that. So from your regard, it was interesting to say that, you know, we're fine with not having this automated one-stop shop solution because every project has different issues to potentially tackle from a security standpoint. So in that regard, you know, the continued growth of Uno-Re is something that I find interesting because, you know, starting with the decentralized insurance kind of aspects, and then moving into this comprehensive Web3 security ecosystem that you guys are providing through something like Watchdog. Can you talk about kind of the journey there? At what point, you know, because you obviously you have to start somewhere in this space. You started with the decentralized insurance aspects. At what point did you realize we really need to kind of build out this comprehensive solution that tackles multiple facets of security?
So November 2022, FTX happened, right? There was an issue with the way pricing of insurance was done. So I'll give you an example. You know, the UST DPEG incident that happened, right? The insurance was being sold, and not on our portal, but on our competitive insurance protocols, it was being sold for 0.5%, right? So what that means is for 50 cents, you could cover $1 worth of UST from being depegged for the entire year, right? This was the cost of insurance. And obviously, when it blew up, the insurers barely were able to make their claims. There were a lot of fights in decentralized courts, not so decentralized, but you know, the people call themselves decentralized. So there was a pricing mismatch. And November 2022, interest rates were rising. The DeFi insurance rate was not going up because the DeFi yield was too less. So the DeFi yield was 3%, TradFi yield became like 5-6% by that time. And people were basically not buying insurance. And I realized that if we can't continue selling at these low levels because that's not financially prudent, right? Because then we're inviting for our LPs to be attacked. So we took those 3-4 months to understand, okay, we need more capital on the security perspective, and people are not paying for insurance because they don't understand the need for it. Where is the money actually going for security, right? And then we realize auditors are taking the major chunk of it. So we're like, we have to do the job of the auditor again whenever they come, whenever a client comes to us. So we're actually baking that in. Why don't we just give that audit, right? Obviously we have to build out the infrastructure, but that's where the idea came into the picture, that audits are anyways, a lot of them are useless, right? There are a few good auditors out there, but the majority of them, they don't talk to you like after the audit is done. There is no warranty on the work that's done, right? Obviously there can't be, but there's no sort of humane understanding between the auditor and the project as well. It's just a stamp, you gave that, and that's it. Like, this is a contract between the both of us. So we realized the 60 to 70% of the security funds were spent on the audit, rest of it on bug bounty. Maybe 5-10% if somebody wanted was insurance, right? When it should be the other way around. The insurance should be the maximum, because that's, you are protecting against it. And then we were like, how should we make this happen? So we were like, let's package all of that together so that we can reduce the risk to our LPs as well. And thereby we can charge more for the same service under the new product. But then we also built out active monitoring. So it was not like same service, but more so like an audit, insurance, as well as active monitoring. So that's where like this was born. It was born out of necessity. Like, we didn't want to get into the audit space. because insurance was like more comfortable for the team personally, right? But then we're forced into this. If we want to continue doing business, we need to do this.
Do you find it ironic that most projects in this space obviously don't remain static. They continue
Yes.
trying to scale, they can continue trying to innovate, doing all those things. But it sounds to me like, from your guys' purview, a lot of the market looks at something like insurance, which is going to change, as kind of this static thing. Just let's get it done once, and then it's going to be good in perpetuity. So from your guys' standpoint, the active monitoring, everything else is really important, because as these projects continue to try to innovate and they don't remain static, how can
Yes.
they make sure that they're protecting their underlying, economy that they're trying to build out, if they don't have, if they allow insurance and security to remain static at the beginning, but they don't remain static and they're going here and
Yes.
there's all these other risks being introduced. So I think you bring up a really good point. Is that kind of it in a nutshell, like as far as like at least that thought process?
No, the thought process is absolutely right. That's why we have continuous auditing in the picture. We offer packages to our clients where whenever they have a redeployment, they can get audited at a very cheap cost, because we do contracts with our auditors who've audited a particular client to make sure that they would be available, if so that we don't have to bring a new auditor to look at the entire code base again. That would like charge more. So in order to make it economical, the continuous auditing process was introduced by us. But Suleiman, I'd like to say something. So projects in this space and what we've seen in the last 2 years, insurance does not come to their mind at this point of time. Like audit, it comes to their mind because the community wants an audit, right? That's something that's embedded in them. If the community wants to protect themselves, they need to make sure that they make audit synonymous with insurance, right? Like I know a lot of people would be watching this particular interview, and like, I just want to say, like, if you want your funds to be safe, you need to tell the founders, like, just get insurance. It's not expensive. Uh, Uno also takes native tokens as payments, right? So if a project is bootstrapping, it's okay. We can take some amount of vested payment for the premium as well. Obviously, the auditors need to be paid in stable coins, but like we do whatever we can. No other auditing firm would do that. We have a vested interest in our clients' health, right? And if you guys as a community want your project and your funds to be safe and your project to thrive, you need to make sure that you make it clear to the founders that they need to get insurance. And if you introduce us to a project and they eventually get insurance, you can also like get a referral fee out of it. Like it's not a Ponzi or anything. It's just you did effort, you convince somebody that security is needed, you should get your cut out of it.
Do you think that this is kind of an education gap
Yes.
in crypto and Web3? Like,
Yes.
the just maintaining the status quo when a project launches, it's like, okay, let's do an audit to make sure that everybody's happy. We have an audit now, and now we're going to do whatever we want to do. And keep in mind, I mean, there's been multiple projects that get audits that still rug pull and that still do all sorts of crazy
Yeah.
stuff. You know what I mean?
The problem is a lot of the projects get a token audit and then they say we have been audited. And then that token audit is used for the DApp and all of that because people don't read it. It's just, if you're putting your money in a token, you're buying it wherever you're buying it, just read a little bit. Like, I'm not asking you, it's like to code the contract. I'm just saying the audit report, just read whether it has the DApp and scope. That's it. Nothing more.
Yeah. Yeah. And you mentioned community, kind of setting the benchmark from the community standpoint. I mean, I'm sure, you obviously kind of being the co-founder and CEO of UnoRe, but I'm sure you're in other ecosystems and things like that. I'm in other ecosystems and things like that as well. So it has to be kind of this mindset shift about the underlying expectation, not only from an audit standpoint, but from kind of the insurance aspect. And I really appreciate you kind of saying that, because I think there's a lot of things in this space that are going to get us out of these gigantic boom and bust cycles.
Yes.
We want to see crypto, maintain adoption, but not have massive fluctuations, things like that. And insurance certainly being one of those regards. Bringing up the community aspect, I saw recently, I think this was a few months ago, maybe back in April, you had mentioned, or there was an announcement saying that UnoRe was transitioning into a decentralized autonomous organization, so a DAO aspect. Can you talk about the background around that thought process?
Yeah.
why that decision was made to try to kind of, continue to decentralize out, and what this means for the community that's here now, or maybe new community members that want to come into the Uno-Re ecosystem.
So, a very good question, because I was gonna try to correct you, because like I'm no longer the co-founder and the CEO. I'm a core contributor, right?
Yep.
Because it's a DAO now. So what that basically means is I do the same thing that I was doing before, but there's a lot more checks and balances on me as a person, because it's not my company anymore. It's everybody's. I would say every token holder has decision-making power, has decision-making authority. So the reason we wanted to transition to a DAO is because, see, the amount of expertise that we need, right, in order to make something like this work, especially with Watchdog, you need auditors, you need claim assessors, you need like actuaries, etc. And you also need, for active monitoring, we can set up the tool, right? But then somebody needs to make sure that they're available online to be able to basically action that request and work with the protocol, etc. I didn't think that the team and the size of the team, etc., was like big enough to be able to handle this endeavor, right? And I also realized that why don't we like do this as a DAO? And I never had like a vested interest in anything else other than like building this for the community itself. So we just thought that why don't we have a DAO in which all of these decisions are managed in a decentralized form, right? I'll go into particular decisions as well that are important and why it should be the token holders voting for that particular thing. But from an effort perspective, like we are now building the Uno-Re Council. So basically, what that would do is we're electing 6 members who are going to be taking emergency decisions, multi-sig access, handling new listings, etc., and also like being the ambassadors of the protocol itself. These are for like quick decisions, small decisions that don't need like that are not UIPs being Uno improvement proposals. But then there are some decisions which affect the protocol and which each token holder needs to realize. So, the most recent one which we did was UIP one, which was the ADE, which was like adjustment of the emissions based on the capacity that is there. So what basically happens is we have capacity pools and then we have APR on them. So these capital pools, then people deposit capital, and this capital is then used for insurance capacity, right? And what we realized that was the APR on this cannot be static, because it has to be dependent on whether the capacity is being used or not. So if insurance has been sold, the capacity is then utilized. So then we worked internally to build an algorithm which would automatically taper the APR up or down based on whether the capacity was being utilized. That's a big change, right? That makes the entire tokenomics algorithmic in nature, right? So we thought of like building that out, and then people eventually passed it. But the decision had to be taken by the people because it's eventually for the people, right? So that's where it is. And the other thing is building it as a DAO also helps us from a regulatory scrutiny perspective, right? Because this is something which is crossing a lot of boundaries, right, in terms of like geographical location. So if we do it as a DAO, we can present our case in a better manner when I hope that situation doesn't arise. But as a core contributor, it's my duty to think of every scenario, right? It's my duty to think of like what happens when that happens and how do we deal with it. So that's one of the reasons we built it like that. And then there were a lot of protocol delistings that were also dealt in by the DAO. The claim which happens, which also needs the capital has to be taken out from the LPs in terms of claims, has to be also voted by the DAO. So that's why we thought of transitioning this to a decentralized autonomous organization. Just a concluding point on this thought. Before this decision, for an entirety of a year, we made a lot of like progress, and these decisions had to be taken. Like for example, the ADE model. the fact of like setting up off-chain capacity, the partnership with the other insurance protocol to get more capital onto the pitch. A lot of the work was done in the background, and we did the DAO when we thought now is the right time to put it out in the public so that people can make the decision. Okay, all this groundwork has been done. Do we need to do this or we don't? So that's why it also made sense to do it Q1 of 2023 when we actually like went on. So decentralization is a process. It's going on, right? I would say within the entire year we would be completely decentralized, but it's gonna happen slowly.
Yeah, and I think that kind of ties into the importance of trust in DeFi communities as well, allowing kind of the community to
Yeah.
take a lot of the decision-making aspects into their own hand. I saw an interesting statistic that you guys had put out recently stating that in July, which was the largest month in 2023 for hacks and exploits, there was $313 million lost. So when you talk about the importance of trust in DeFi communities, the erosion of trust, I think a lot of the things that we've talked about today are about kind of rebuilding that trust and in the preparation for mass adoption. I don't know if you kind of have any thoughts around some of these hacks and exploits and the way that Uno.Re is going to kind of rebuild trust within the DeFi aspects would be fantastic if you could touch on that briefly.
Cool. So with respect to, the hacks that have happened, there are a lot of different attack vectors, right? Some hacks happen due to Oracle failures. Some hack happens due to problems in governance processes. Some hack happens due to like the recent Curve one. That was a really like tough one for us to deal with. The reason being, it's a compiler issue, right? Does it fall under a smart contract policy or not? We've not made that decision yet, but these are some sort of problems that we as a DAO need to deal with, right? We need to deal with whether we do this, it would then bring a precedent into the picture. Do we really want to do that? What happens if there's a compiler issue in Solidity? Do we expose the entire portfolio to that sort of an issue? So those are, I would say, some of the salient points that I can say from the recent hacks that have happened. Protocols have not prioritized security, right? They've prioritized growth, and users do not want security. Like that's there is no other inference that I could bring, right? At the end of the day, a user which has gone through multiple hacks, he just leaves DeFi, right? He's probably not going to come back for a long time, and the new participants are looking for like quick cash, so they are not worried about security per se. So as long as we're trapped in this cycle, I don't think the situation will improve.
Yeah. Especially understanding that we have so many different technologies kind of converging at once. You think about number one, crypto, you think about artificial intelligence, which has kind of been the hot topic over the past, let's say 6 to 8 months, Internet of Things, biometrics, digital identity, all these things. Understanding kind of your guys' thought process, because, starting as kind of the decentralized insurance aspects and then moving into a comprehensive security suite. So you guys have very much so understood market trends and what kind of needs to be there from the security standpoint. Is that something that you're also kind of looking at, how these technologies might converge over time and start playing in DeFi to kind of prepare, do you think that might eventually down the line be some sort of an expansion model within Uno.Re from the security standpoint to make sure that you're capturing some of the other market things as this technology continues to develop over time?
So I'm an AI engineer. Like before I got into blockchain, like I was like I have a lot of like knowledge as well as like practical applications within the deep learning space. So like I have written papers as well on claims automation and other such aspects. Before the entire AI conversation was there, we were already using a lot of these tools, not like ChatGPT and LLMs, etc., but we were using tools which were basically helping us identify the data that is coming from the blockchain to identify vulnerabilities that were there. And one of the things that we continue to use is we have an automated auditing engine, right? That basically for free, we take in the contracts of the users of the partners on the call, on a security console call, and within 15 minutes, an audit is done on their live contract deployments, right? And this is an automated audit. We tell them we bear no responsibility for this, but this is just for free compliments of Unori, right? That's something that we do. And the other thing that we also do is, in order to calculate what is the distribution. So let's say that there's a staking pool and there's $500,000 worth of TVL there. The project does not have money to cover $500,000 worth of assets. So in this case, what we do is we put the contract address onto our AI engine, and we built this mid last year. What it does is it looks into how many people have staked, what is their average stake, and it will basically give us an entire sheet of, okay, like if we want to cover 80% of the addresses, what is the sublimit that we need to impose? So with a $5,000 sublimit on each wallet, we can then cover, like usually I was doing this last week for a protocol. The $500,000 policy came down to $156,000 with a $5,000 sublimit, because you're not covering the whales, you're covering everybody. It's like FDIC, right? You don't cover 10 million, you cover 250K for every person, right? That's deposited. The whales can buy coverage separately on the cover portal. So this forms a very beautiful solution. And this used to take like 3 days when we do this like off chain by taking the data on chain and then running it through an Excel algo or a Excel matrix. It just used to take 2-3 days for our analysts. So we just built the entire system to do it immediately. Now those reports come in like within a few minutes.
Wow. Kind of last but not least here, I always like to ask, if I missed anything that you might want to touch on, or do you have any forward-looking statements? What are you most excited about for the remainder of 2023 for Uno-Re and the community? Kind of your floor here to touch base on anything I might have missed or anything you might be excited about coming down the pike.
I love bear markets. A lot of people might not want to hear this, but the reason I really like them is because they allow us to build without a lot of noise, right? So when the market was bullish, a lot of the people were concerned about the token, right? A lot of people are currently concerned about the token, but they also realize that new money is not coming in, so like nobody can do anything, right? In this particular scenario, right, you realize which founders are working and which founders are actually wanting the advancement of the space. And I'm happy to call myself as one of them. Like I enjoy this time because it allows me to particularly reflect on the important aspects of the protocol, making the protocol deflationary in nature, making the protocol actually revenue positive, making sure that the emission that we're doing as we released in UIP1, the ADE, automated dynamic emission, we're making sure that each dollar of Uno emission is going to make sure that over a 6 or an 8 month time period, it leads to more deflation, so that we can capture more premium by the capacity that was raised in order to make sure that it's net deflationary. So these are some of the things that I frankly, with the amount of pressure that comes from the community, would have not been possible in the bull market. So I'm enjoying this. To the community members who are hearing it, we will deal with the market situations as they go on. We have a lot to unpack within the next few months. We're going to be releasing more products. We're going to be releasing an RWA pool. We're working on Uno V3, which would allow for dynamic pools as well, like more stuff to be released there. I'm going to work on an EIP as well myself to make an insured ERC 4626 vault strategy, which would basically, like, you can take the premium of the insurance out of the yield of a particular asset if you deposit it into the vault. So that's called an insured vault. Working on those things, and I'm happy that there's this time and God's grace that we've been able to survive, and I hope that we would be able to do that in the future with the support of our community. And I urge whoever is here listening to this particular interview that we still have our elections on. The nominations are open for another week. Please go and nominate yourself so that you can participate in the growth of the protocol as well. And it's a paid role. you get 18,000 UNO tokens as well as $1,000 over a three-month period in order to, for each council member, by the way. So it's an important role. It's not a full-time role, but it comes with responsibility. So if you're up for it, please do nominate yourself.
Well, I really appreciate your time. Again, if you guys are listening to this, we had Jas Singh, who's a core contributor within Uno Re. Also, I found a lot of education within this, kind of really pivoting the mindset, kind of at insurance and security at the base layer of what we should be kind of looking at in this space. And just taking an audit for the sake of an audit might not be the best route that most community, regardless of what community or ecosystem you're in. We should have higher expectations in this space about what we expect from projects. And Uno Re is certainly a solutions provider that can provide kind of a comprehensive security suite for any project out there that wants to kind of take care of their community in that more comprehensive way, and building out that foundational layer of trust at the baseline level. So Jas, certainly appreciate your time today. I'm sure this won't be the last time. I know we've got a couple of spaces this month as well. Really looking forward to talking to you in the future. So thank you so much.
Thank you. Thank you, Solomon.